Well, we mentioned the Bank of Canada left interest rates unchanged, but did leave the door open to rate cuts down the road. Right now, there's a belief, according to Bloomberg, that the U.S. Federal Reserve will not only keep rates unchanged today, but will also push it back on the idea of laying the groundwork for imminent rate cuts. But will we find out if there's a difference of opinion among Fed officials themselves? Michael Greenberg is a senior vice president and head of America's portfolio management at Franklin Templeton Investment Solutions, and he joins us here in studio. How important is this decision and any of the commentary around it, do you think, for the market, given the stock market's at an all-time high and all of that?
Sure, yeah. I mean, the decision itself is probably going to be a non-decision. I think it's broadly expected that they're not going to do anything on the rate cut portion of their meeting. But I think what will be interesting will be more around, is there any dissenters? There is some people on the committee that are suggesting maybe it is time to cut rates. So we'll see if they actually officially put that to work in actually officially dissenting, which could create some interest. And then, of course, the press conference, we never really know which way that's going to go and whether Powell was pushed a little bit on, Fed independence and things like that. So that'll be worth watching. Every
time I bring it up with guests, everybody says, Powell pushes through all of that political pressure. Mm-hmm. But, the pickup on what he does today will be broader than just the financial press, literally because of that tension between the president, and it almost reframes everything he says. Either he's, defying the president or he's giving in to his demands. That doesn't seem like an easy job.
No, and probably won't have to deal with that for too much longer. Obviously, it's fairly likely he'll be replaced not till next year. I don't think we or many expect that it'll be before that. But the challenge will be around, is there going to be a shadow Fed committee leader if Mr. Trump actually announces that person, earlier than maybe normal, and that would create some confusion, because then it's, who do you listen to?
Yeah. That would be very complicated to have multiple voices. So what is your assessment of the U.S. economy right now? Because I guess at the end of the day, if we're going by the data, and even some difference of opinion among Fed officials, informed by the data, what is the data telling you? Yeah, I mean, it's telling us that there is an impact from the tariffs on the economy, but it's probably less than many of us would have expected back in April at the peak tariff fears. So, we think of it as a less bad sort of situation than maybe what we expected a few months ago. That being said, when you think about tariff costs and how companies maybe turn over inventories 2, maybe 3 times a year, it does take time for those to start to hit the real economy, whether it be in higher prices, potentially a little bit less consumption. And we're seeing some hints of that, but I will say it's outperforming expectations. Hence, to your point, why markets are probably, touching all-time highs, maybe even again today. Yeah. So what's the most common question that your investment team is fielding then against that backdrop? It's really that dichotomy between the inflation backdrop and the growth backdrop. And of course, that's the big question for the Fed and for Powell as well. Which one do you focus on? If growth slows, do you cut rates? If inflation is maybe a little bit higher or stickier than expected, do you leave rates where they are? So, looking at the labor market and other indicators around growth are really key for us. But then also on the inflation side, outside of just sort of goods inflation, are we seeing that pass through on inflation in the services side, in the labor side? Is it broader than just certain parts of the goods sector? And so far it's higher. There's expectations inflation will be a little bit higher. It will take a little bit longer to pass through, but so far it's again not as bad as feared, and hence a little bit better backdrop for risky assets in markets. Yeah.